Hi everyone, this is Sandeep. Welcome to my YouTube channel. In this video, I'm going to do a quick analysis of 7 stocks from a financial performance perspective and decide whether to invest or not or what needs to be done. So let's start first with Dr. Lalpath Lab. Now, if you observe last 1 year, there has been 11% profit. So this, when I see today, it is as of 22nd February 2022. Now we need to understand from the peak of 4,000, there has been a correction of almost 30%. Now we need to understand why. So let us go through the financials. Now the P ratio is 76, quite high. And if you go to the, let us go to the financials. Let us take the quarterly one. If you see the last 2 quarters, there has been a decrease. And if you see December 2021 to December 2020, it is okay, but I think the reason is, I guess, last 2 quarters there has been a correction. Okay, and if you see from a cash flow statement, it is quite okay. Free cash flow has been increasing. And if you see from an income statement or annually, yes, it has been increasing. So I guess because the last 2 quarters, last 6 months, there has been a correction, hence there has been a correction in the stock. Now if you look from a news perspective, yeah, again, that's what I said. Now what to do with this stock? I would say start accumulating little bit. This is an educational video. Maybe just take a little bit, a position and wait. If it corrects further, then don't invest further. This would be my review, my analysis based on this. And let us go through screener. If you see, the return on equity is 25, the return on capital employed is 35, which is fairly decent. You see the stock is currently below the daily moving average 250. Now we need to see till where it can correct. So right now this is the level. You can accumulate a bit. Now moving on to Firstsource solution. Okay, it has given last 1 year 18%, but if you see from July, there has been a correction of 47%. Now that is something we need to understand why. This is something which we should worry. We need to understand that. P ratio is 23, okay, fairly valued. The dividend yield is good, 2.48%, not bad. Let us go to the financials. Annually, it has been increasing. We need to, but however, the net income is also fine. Let us go with the quarterly view. More or less flat. Extremely flat. The profits quite very flat, not a big thing. We need to look at the cash flow. This is the problem. The cash flow is not very strong. You need to wait for the next year to see the cash flow. I would say pause a while before you invest in this. Whereas, let's see the news. What is the reason? Just a second. I guess this stock is going because they have lowered its revenue guidance for the next year, FY22, and that is the reason why. Plus, business was impacted due to higher employee absence. So the biggest risk is employee retention. So you get your revenue for an IT company, you get your revenue from your employees, and if they don't work full time, and if there's absence, then yes, that's going to impact your financials. So I would suggest avoid this stock. There are so many more IT companies you can invest in, so please avoid this stock. This is my, again, for educational purpose. Next, I will go to an IndiaMart, Info Edge. As you are aware, Info Edge is they have Naukri and a lot of other websites. I think it's like more now becoming like a investment firm. They invested in Zomato and other large startups. You see, there has been 1 year. Yes, it's just been. Sorry, 1 second. It's been a 10%. So from the high of October 14, massive correction of 36%. You need to understand why. We need to see the financials. The income, if you see annually, yes, it has improved quite well. However, we need to see from a quarterly perspective. Yes, if you see December, there has been a reduction in the revenue from a quarter-on-quarter basis. And so from September to December, there's been a big downside in the numbers. And if you see, cash flow is okay. We need to see the balance sheet. You see, long-term investments has been a huge jump, and hope these long-term investments perform well. Speaking of which, let's see the debt. It's okay, consistent. Only thing is they have invested a lot, and hopefully we need to see that, hope that they have done well. Now what to do with this stock? What I would say is accumulate little bit of share, not a lot, and wait for the FY22 results, and don't buy a lot of this, buy little bit small quantities of this. And let us see the news. What is the latest news? Nothing negative as such. So the correction happened because the latest quarterly result was very weak. I would suggest to accumulate a little bit, Now we will go to the next one, which is ICICI Prudential Life Insurance. So in the last 1 year, 8%, okay, but from September there has been a correction of 30%. Now we need to investigate the reason why. It's an expensive stock, P/E ratio 76. Okay, there has been a good revenue growth, but the profits have not gone up with respect to the revenue. Let us see from a quarterly perspective. Yes, September was fine, but December was okay. There's been a steep fall in December, so probably that's why this correction has happened. Balance sheet is okay, my opinion. We need to see the assets. It's fine. Liabilities have gone up, the other liabilities. That's something. The debt has gone up, the liability has gone up. Need to see why. This is a cause for concern. Let us see the cash flow. More or less a cash positive company. Now we need to see the news. Yes, now since this is an insurance company, LIC IPO is coming. So probably that is the reason why this can be a problem. So probably the corrections happen because of COVID and all that, and LIC IPO is there. So I would say wait and watch. Wait for a month or two, see how LIC IPO goes, and then probably invest in this. Maybe wait for a few months, see how, and then go for it, because there has been a good correction. I would say wait and watch, because insurance industry, yeah. And next I'll go with Jubilant. So if you buy Domino's Pizza, if you enjoy that, and if you like Domino's Pizza, I think Jubilant Industries is the major franchisee for that, exclusive I suppose. And if you see from a high of 4,500, it's been 33%. Now we need to see why. The P/E ratio is very, very high, very, very expensive, 169. Let us see the financials. Yes, that is the reason. If you see, the revenue has gone down, and if you see the margins, the profits are shrinking, probably because of COVID. If you see a cash flow, oh my god, okay. There has been not a cash positive company. Now if you see from a okay, if you see liabilities, not much change in the balance sheet, except for there's been some long-term investment, so they probably want to invest and grow. That seems to be an improvement in that. Now debt to equity, oh my god, this you have to see 52%. So keep that in mind. So what to do with this company? Let us see the quarterly results. Okay, there has been an improvement in the quarterly result, last quarter of December. Okay, However, the profits have also increased from the previous quarters. Now, what to do for this company? I would say wait for a while and then invest. Wait for the FY22 results, see how it is, and invest. Definitely long term there is a good growth because of quick service restaurants. A lot of people go, youngsters these days, go and eat only in these fancy Domino's pizza restaurants. Probably wait for a while, because the only worry is my cash flow. It is not generating mostly. So wait for a while, wait for a few months, see how it is, and see the FY22 results, and then probably invest. And there are a lot of other FMCG companies which you can invest in. Now next we will go to Abbott. See, last 1 year, okay, it's given for 15% results. So Abbott India is actually a pharma one. Pharma, they also make healthcare products, nutrition, products for improving your body nutrition, all that stuff. And if you see from the peak October 4, there's been a 30% correction. Why is that? We need to see. If you see, PE ratio is 50. Okay. If you see from a financials, yes, there has been an improvement in profits. However, let us see from a quarterly perspective. It's been fairly flat. Actually, profits are the last September very, very flat. There's not been a big improvement. Probably they're expecting more from this company. Hence, probably this correction has happened. Let us see the cash flow. It's fine. It's fairly consistent. The free cash flow. Let us see the balance sheet. The liabilities are increasing. This we need to be careful about, cautious about. Now, what to do with this company? Do you want to invest? 83% are saying they are good. Now it has gone back to its the support level, which has been there for, let's say, 5 years. Wait to see. So currently it is in the same support level. So probably you can accumulate. There's been a healthy correction, I would say. You can accumulate the stock, but however, we need to see the FY22 results. Next, I will go for RBL Bank. Now, if you observe the RBL Bank, 1 year 41%. Oh my God, it's been on a downward trend. We have to see why is this thing. Revenue, okay, revenue and profits have come down. Let us see from a quarterly basis. Okay, it has been there has been slight improvement in the revenue in the last quarter compared to previous ones. We need to, especially in the last quarter, seems to be a slight improvement is there. But if you see from June to December, it's been very flat. Quarter on year, if you see December 2000 is more or less slight improvement, but from June, yes, there has been a downward revenue, but the profits have increased. Let us go through the cash flow. Okay, there's been a good improvement in cash. Whereas if you see the assets and liabilities, yes, there's been a huge increase in the liabilities. We should be careful about it. And income very flat. I would say wait for if you see the forecast, I would say avoid or wait. There are a lot more stocks, especially in the banking industry, which you can invest in. So yeah, this is my analysis of these 7 stocks. Hope you enjoyed. Any feedback or any improvement, let me know. Any questions, any clarifications, let me know. Happy investing. Thank you. Bye.